Welcome to TradeTheNBI.com. This is John's report is for the 23rd, and we got the rally that I was talking about on my anniversary date, and it really corresponded with the fact that, like I said, you had that talk about the potential that things were actually moving forward for tax relief, and that, the news media reports of everything freaking out were greatly exaggerated. Plus, we ended up with the pretty strong move of the orange like we were looking for all the way back below, and it's just the short-term buyers. Now they've gotten pretty extreme at this particular point. We might see a little softness going. We're already seeing a little bit of it right now, and you're going to need to see a carry through of midterm buyers breaking through into the green zone here, as well as red. Now we were also starting to see though orange underneath for the first time. So that's got expectations with it. It was all built into this extreme histogram right here, where we knew that we didn't reach that extreme oversold that required new lows, and sure enough, gave it just the right impetus. And once it started, it just kept going throughout the day. And all we've done is just pretty much come back from where we were before, which was that swift dip below the ABMs when the whole Charlottesville and that situation developed. Euro's still holding up very strong, and it still buoys the overall S&P and is going to keep things strong. The fear trade faded, obviously, when you have that kind of move. People were moving money back into equities. Oil continues to be right around this flat area, and again, this is really going to still, like I've said, come down to, we had gasoline builds again, which is not as significant as whether or not we're seeing significant growth, because those supplies would be eaten up in any significant growth rate. So that's still going to be the key focus for what we look at oil for. And gold, just going to hold up on its levels. We might see a little bit softness here as we're starting to see the potential for cyan to move above red for the first time on the DOC here. We've had plenty of little overbought, but we've backfilled all of those for the most part, so none of those need to be revisited. The only other one is the dip below the red line right here, but that's got to happen on a sell signal. We also noticed that we have DOC with the orange moving above 13.5, and that's definitely going to create a little bit of weakness in there. And so, let's shrink this 5K chart for the day, and you can see we started out strong, and when I was talking, it was about right in here. We were just began a little bit of a move back when we had the move above 13.5. At the same time, we had the DOC spread, and I was looking for just the positive extremes to be retraced, which was just this move right back here to the lows. So as I said, it was an opportunity to add in my, and boy was I correct, because once it started, it just did not cease. Look at that cyan under the red the entire move, all the way until just after market close there. We ended up with this soft patch, literally, which is taking us right back to the 50%. But now that 50% is all the way up here versus where the 50% was back at the start of it. The 50%, we can look at the number right here, was 24.24, and now if we go all the way to here, the 50%, 24.47. So huge difference in what a 50% retrace is. However, still behaving on that same aspect of a 50% retrace. For the time being, we've had this short configuration, and we've been stuck in the continuation zone with the orange. Might be breaking out of it just about now. We'll see how that breaks out, but pretty much following exactly what we would look for when looking at these readings. Any of these moves above the orange, when we had cyan below the red on the DOC, clear indication that they weren't going to react in a strong downward move. They did give you down bars, but they didn't create a continuation trend, even though we were well above the warning line here at the plus 25 on the shakeout. Just meant that things were overbought but continuing. And when you get a continuation move like this, you usually, even on if there was a dip midday or whatever, you tend to finish towards the highs. That's just because you've got a significant number of shorts trapped and it forces them to cover at the end, and that usually creates another burst at the end. We didn't see as much of that on this one, which means that there may not have been as many shorts, and we saw a lot of them had exited from the daily chart before, so weren't as many there to kind of give that. But there's still plenty of liquidity. We saw as many people talking about moving out and being in cash and the bond increases, so there was plenty of available capital to continue to push this market. So we'll see how it works out. But all in all, right in line with our expectations overall of how things would go, and any modest pullbacks are still by the dip situation. As always, though, trade well. Look for me on the Skype chat.